Hi, everybody. Robyn Green, owner and founder of Movies for Mommies Canada. Welcome back to our series as we branch out with Smart Money Moms. We're really excited to have everyone here today as we focus on relevant financial topics for moms who want to become more self-reliant and with their finances and achieving their family goals. And to that end, we're really excited to welcome John Podlewski, a financial planning expert, CEO, and founder of WealthyPlanet. Welcome, John.
Hey, Robyn. Hello, ladies.
Great to have you here with us as we take a few minutes to chat. I guess, as we look at tax season is around the corner, literally, and 2020 was a year like no other, we thought maybe we would do some chatting about what tax season is going to look like. So, I think the first thing is there's so many changes coming down the pike is this the year, if you normally do your taxes yourself, should you be thinking about hiring someone to do the taxes? What factors should be guiding your decision on whether to do it yourself or hire someone?
That's a great question. First off, I'd say we've been given a little bit of liberty and time for this year because of COVID and all that's happened within the country. The federal budgets are just being presented. Provincial budgets are coming out right now. So don't be surprised if even when you file some changes on the NOA that will come through because of those things. But I would say first and foremost is simplicity. So if you're a persona out there and you have a T4 and basic deductions, maybe your RSP, your TFSA, but other than that, you don't have a complicated life. You're not in business, you're not self-employed, You do a 9-to-5 program. You might have a group plan at work that you save for a pension. You probably can go ahead and use one of the freemium sites out there and no issue whatsoever. They will prompt you on every single deduction that's out there, just like somebody would if you were sitting at one of the kiosks in the mall. And so that's what I would say first and foremost is that if you believe that you have a simple tax return, which means you make a single income or there's two incomes to a home, you have your basic deductions and you're good to go. There's no issue with that. And you'll see a lot more companies out there are offering, free, even companies that would charge you at a kiosk at a mall have a website.ca for you to do it for free. Now, just buyer beware. There's add-ons to that. So for example, if you're using Wealthsimple's freemium program there, just understand they're looking at managing your money in an ETF portfolio. As long as you're good with that, no problem with it. If you're going to use like hnrblock.ca, there's added costs if you need to talk to somebody. So that's why I say simplicity is the most important factor going into that.
Right. That's really helpful. And it's buyer beware. Read the fine print of, as you go along. Exactly. Sure. That's good. Well, so I guess that kind of leads into our other question is, some people are like, oh, I don't want to hire an accountant or a professional, but do you actually save? Can you, if you're not straightforward, so, people have different setups and dual incomes and all of that. Although you're paying someone to do your taxes, can you actually save more money that way than if you say, oh, I'm just going to do it myself?
Okay. So, let me again reinforce the simplicity side because I have a great little story to share with you. So I have a son in university over at Brock and tax time. And so he calls me and says, I'm at H&R Block to do my taxes. And in a big company, relevant company, does a great job. And the question was, they want him to pay an additional fee in order if he gets audited, will they help him with the audit? And the first thing that came to mind for me was, well, if you're doing a great job, why would you have to pay an insurance over top of a fee in order to get audited, So, his taxes were completely simple and we went through them and all good and didn't need that. So here's the question that everybody should listen to, okay? If you have a complicated lifestyle, you have, either you're in business or you've got some self-employed income, multiple income streams from investments, maybe you've got some rental houses, things that are going on that you are not the average Canadian consumer, You need to visit with an accountant a few times at least before you decide to silo on your own. Here's why. Your taxes won't change much from what you claim year to year unless your life changes dramatically. So I've had an accountant because I've been in business for 30 years, okay? But I will tell you, after the first 6 or 8 years of using my accountant, and he's a great guy, does a great job, I don't see much changes anymore, If income goes up, great, it's applied to and things are being discussed. But for the most part, if you're the average ordinary Canadian out there, there's great freemium accounts that you can get onto. And then maybe you'd spend 30 or 40 bucks asking a few questions, but after you're done and the cement's layered, then you're good to go every year after that, right? Unless your life has had a dramatic change. I don't mean a COVID change. I mean an income change, or you're paying too much. You've got massive promotions. You've decided to go into business. Whatever those changes are, then you should get some core fundamental insights from an accountant, or bookkeeping from that perspective, and help you out make those decisions moving forward. And then once you've made them, and you understand what you're doing, and a few years later, you want to go independent from that perspective, all great. But at least you've gotten some great advice, right, in the interim.
You've got the infrastructure, and that's what's really important. Exactly.
I agree.
Yeah. Good. Well, you know what? I guess that leads, once we've saved all this money gotten all our money on our tax return, is our last question of the day is to say, COVID has been an interesting year. Some people, it's been really, really challenging. And for others who didn't take their vacations or have summer camp or do that home renovation, they are sitting on a lot of additional income. And the question is, what would be a great route to do with that or to invest? How would you suggest breaking down some of those investments and what to do with that extra cash?
Yeah, that's a great question. It comes up to us all the time, by the way, because per capita, people have saved more money, being restricted to go out than they ever had before. And so the first thing I would just say, folks, if you have found a way to discipline yourself, that you have got excess money, please continue that discipline. When we all get our shot and life comes back, right, you've earned the right to continue that discipline and save effectively for your life. So that was the first thing I'd say. I worry about people who have been saving for the first time, going back to bad habits and being, in a cash flow, challenge, right? Because they're back out spending on those things. So that's the first one. The next one I would say, depending on where you are in your life. So if you are a young person, new in career, don't have a lot of, tax issues, I would wait the RSP out till you earn at a higher rate because you're getting a marginal rate deduction.
Right.
So too many young people buy RSPs too quickly, where the TFSA is a primary vehicle created for that perspective. So I would use the TFSA as my primary focus on excess money right now. That way I've got my tax advantages in place on the growth. I don't get dinged pulling it out and have to pay back anything, much like an RSP. And I would put it in an income-based scenario. Right now, when I say income-based, it's a risk tolerant scenario based on income. Why? Because if you're not used to saving that money for years and years and years, and you're new to saving it, what I would implore you to do is that almost make it your emergency account for now, right? If the washer breaks, if the brakes go on the car, and you normally
if a pandemic hits, I think a lot of people didn't have that savings because, who would have thought?
Exactly. So I personally use ETFs, right, for my investments. I do that because, at the end of the day, most of the fund managers in our world, and this is a Forbes 500 quote, 88% don't beat the ETFs out there in the marketplace. So far be it for me, who am not a portfolio manager, to go against, right, the 88%. So I would use that. I look for the lowest management expense ratios as possible. If you're paying anything over 70 beeps or 70% of 1%, you're paying way too much, right? First and foremost. So lowest cost, highest yield, lowest risk. That's where you need to put your excess money. And you can get that, from us. You can get that at a Quest Trade. You can get that at a Wealthsimple. What makes us unique is we built a strategic financial plan that encompasses everything. So you're not just a product, right? If you go to those companies, it's just a product. Okay.
This has all the best of the best.
Plan built around the product. That's where we come in.
Excellent. Well, you know what, John? These are some really great tips for our moms. Thank you so much for your time. And we'll look forward to our next series with you. We'll have lots of other questions. And again, John Podlewski, CEO and founder of WealthyPlanet at WealthyPlanet.com. Thanks so much for your time, John.
Thanks, Robyn. A total privilege.
Thank you.
Cheers.